Second largest bank collapse in the history of the United States happened on Friday, and it's because of the Federal Reserve raising interest rates. Silicon Valley Bank, home of almost all of the major tech investors over the last 20 to 30 years, just had a 2008 style bank run. Honestly, it's more like the Great Depression bank run, but major investors and corporations such as Roku, which just lost a quarter of all of its cash, and Circle, the creator of the stablecoin USD, which is no longer worth $1, are losing billions of dollars, and FDIC insurance will not be able to save them. FDIC insurance only covers up to $250,000, and these companies are losing billions of dollars. Silicon Valley Bank made a massive bet that interest rates would not go up as quickly as they did. Back in 2021, they purchased a ton of bonds that yield 1.79% on average, and now I could go out and buy a bond for 5% yield, meaning these bonds are worthless. No one wants a 2% yielding bond when you can get 5% risk-free. When Peter Thiel's fund told investors to go get your money out of this bank, Silicon Valley Bank was forced to sell these bonds at a loss to give investors their money back. And they just couldn't cover it. They didn't have enough. This happened pretty much overnight, so the details are still coming out. Follow me if you want to stay up to date on everything, because the contagion is going to be huge.